Well, have you heard of open banking before? Prakash Sinha says it's no less than a revolution in the way that customers can consume their financial services, gaining a significant momentum globally. Prakash is Senior Director and Technology Evangelist at Radware and joins us now to explain further. Welcome to Ticker News today.
Hi, Adrian. How are you?
Yeah, going well. So firstly, what is open banking exactly?
The open banking is use of APIs that are publicly available, and these are now being used by many of the service providers, banks, financial companies, and also the fintech companies, the new applications that you use in everyday life.
And so tell us why Australia is one of the early adopters in this space.
So it started off in the UK in about late 2015. Australia was one of the first ones to join open banking. So started about in 2017. The consumer data rights called CDRs, they went live in July of 2020 actually. But the initial start was in 2017. So one of the first ones. And there are lots of companies in Australia, ANZ, Westpac, HSBC, Citibank, NAB. Many of these are open banking practitioners.
So tell us about the fact that open banking opens customer data to third parties but allows for customer consent. What does that mean exactly?
So typically when you did banking, your data was with your bank, right? And they controlled that data. And therefore, it was very tough for consumers to actually switch banks because they had all the information on you, right? This CDR, which is the consumer data right, gives the customer or the consumer the right to their data. And therefore, the banks are required through the Australian Competition and Consumer Commission, which is the ACCC, to open up this consumer data. And if the customer wants to switch or add new companies or add new financial applications, allow them the right to give consent so that their data, which was earlier locked in with this the bank that they did banking with, to open it up to third parties.
So tell us, just to finish briefly, you say open banking will threaten traditional financial services companies if they don't take it seriously. What do you expect the future to look like?
So I would see a lot of mergers and acquisitions, first of all, because banks, if they don't do anything, even though the market is growing very rapidly, they'll grow slower than the market and therefore lose market share. So they have, in order to increase their market share, first, they have to have their applications that adhere to open banking. And second, that they have to increase their market share with the new type of applications. So these are applications that allow customers to dashboard information from many different banks and many different providers together, or maybe new payment services. There are many all around the world, mortgage services, a variety of different new type of payment services. So they have to jump onto that. Otherwise, the millennium generation is going to leave them.
Prakash, great to chat to you today. Thanks so much for your time and keep us up to date.
All right. Thank you.